Yo! While Bitcoin has quietly rallied from 57,000 to over 64,000, a number of Wall Street firms are making moves. Standard Chartered is still calling for 100K in 2026. Eric Trump's American Bitcoin has accumulated over 8,000 coins and remains bullish. And we also have a $200 billion firm, VanEck, saying some interesting things about Bitcoin. While you watch this clip, ask yourself, why are these Wall Street firms getting more optimistic on Bitcoin at the exact same time that everybody is losing faith? Do they know something we don't?
What I've been telling clients is that you want to have your full position by October. You know, we respect the 4-year cycle, and it's been one element in kind of not buying every dip in Bitcoin this year. And not to say we didn't buy some of these dips. The first time that Bitcoin hit 60K, we noticed some really one-sided positioning in the derivatives market. And then we got the bounce into the low 80s, ran right into the moving averages. And on this retest, there hasn't quite been the same type of capitulation signals in terms of, you know, liquidations or the premiums that people are paying for puts versus calls. And I think that the market noticed that. And while there was definitely a lot of bearishness, we didn't see that same type of capitulation. That said, puts are still really expensive versus calls by historical standards. We're seeing that like in the 80th percentile. So it not quite the 99th like we saw, you know, the first time BTC hit 60K, but puts are expensive. Realized losses are in the 90th percentile historically. So people are dumping losses. So, you know, there is maybe some hint of sellers exhaustion that may emerge here. And then we've also seen the older cohorts, kind of 2-year plus holders, have slowed down their selling. So that's another maybe hint of sellers exhaustion. And I think that's what's kind of leading to this Bitcoin bounce here in the latter half of the week. But I'm still kind of waiting and watching to get more aggressive. It really depends on your kind of individual positioning and risk reward. What I've been telling clients is that you want to have your full position by October. So, you know, putting in some type of like time-based buying where you add a few basis points every month or so until we get into Q4. That seems like a reasonable strategy. You know, I can't say I know exactly what's going to happen. But the fact that the 4-year pattern matched up so well, like, you got to respect it a little bit.
Well, you look at that. Nico vindicated, baby. I've been telling you guys since October. I've been getting so much heat. I've been telling you guys about the 4-year cycle. And then you have someone from VanEck. And again, shout out to Scott Melker of Wolf of All Streets for hosting that interview. Go check out his channel. It's fantastic. But this is what I've been saying. The 4-year cycle is the only indicator, the only theory that hasn't broken. And now you're starting to see that, you know, go into, you know, traditional Wall Street. They're paying attention to it. He's saying, hey, we have to respect this. It hasn't broken yet. And it's interesting. He's mentioning the month October. If the 4-year cycle holds, as I've been saying for the last couple of months, and all you guys are beating me up in the chat, if the cycle holds, we topped specifically where we were supposed to top, which was October of 2025. And if it holds, we should be bottoming out October of 2026, which makes me extremely bullish. I've been saying this for the last couple months. That 2027 is going to be a fantastic year. I'd be very surprised if we weren't back above 100K at the end of 2020 in 2027. So yeah, man, I mean, it's great to kind of see these videos. It's you can't ignore it at this point because it's perfectly following that cycle. However, despite all that being said, Wall Street has been accumulating and they still feel very bullish about the future of Bitcoin. Specifically this year, Standard Chartered keeps a 100K Bitcoin target despite strategy pivot. And that could actually come to fruition because if we do bottom in October, And let's say the bottom isn't that bad. Let's say we don't have a 70% capitulation, which would put us in the low 40s. Let's say we bottom out at 50 or 60. If you look at Bitcoin's performance historically from the bottom, when it bottoms out, it rebounds very aggressively. So if we do go into that region of 40 or the 50Ks, we're not going to spend a lot of time there. Maybe a week, maybe 2 weeks, but it's going to bounce back very aggressively. Now, is it going to bounce back all the way to 100K from 50K to 100K? I mean, that would literally be a God candle. It would be a 50K candle. That would happen over a couple of months. Could it happen? Potentially. Nobody knows. If they're telling you they know, they're lying. But what we all know is that Bitcoin is going to go up forever because it's infinity divided by 21 million as long as governments continue to print money and debase their currencies, which we all know they have to. This is inevitable. At least that's what I've seen. That's what I've experienced in my time in Bitcoin. So let's get to the article. Bitcoin remained on track to reach 100K by the end of 2026, despite recent volatility tied to strategy. A Standard Charter said in a note, the bank said the recent weakness reflected on a communication issue rather than a deterioration in Bitcoin's medium-term outlook. It maintained its year-end 2026 price target of 100K. Standard Chartered said that strategy had shifted away from using Bitcoin purely as an accumulation vehicle. Instead, the company was increasingly positioning its Bitcoin holdings as collateral backing credit products, such as its, you guys know the product, the stretch stock. Quote, I see what is happening at strategy right now as a communication challenge, nothing more. It goes on to say, Kendrick said that strategy founder Michael Saylor was attempting to convince investors that the role of the company's Bitcoin holdings has changed. Rather than continuously accumulating Bitcoin through debt issuance or equity sales, the holdings were now intended to support Stretch. The firm said that explaining the strategy could ultimately reduce the need to sell Bitcoin. Kendrick likened the approach to central banks pledging to do, quote, whatever it takes, arguing that credibility alone can eliminate the need for intervention. It goes on to say, data shows both Bitcoin and Stretch weakened after strategy announced the sale of 32 Bitcoin in early June. Bitcoin fell from around 80K to below 60K before recovering part of the decline, while STRC also dropped before stabilizing, highlighting the link between investor confidence in the preferred stock and Bitcoin's price. Standard Chartered said the recent sell-off represented near-term noise rather than a change in Bitcoin's broader trend. It added that once investors understood Strategy's revised approach, both Bitcoin and Strategy could recover, noting the stock's multiple to net asset value had fallen to 1.0. So following up on the other breaking news that we talked about in the intro, Eric Trump, despite the negative price action, says thrilled to announce American Bitcoin crossing the 8,000 Bitcoin mark. Even with crypto market volatility, I want to reiterate how we continue to differentiate ourselves, mining at a 52% profit margin in Q1 and continually adding to our treasury, all while maintaining one of the lowest SGA ratios in the industry. The stacking continues. Huge congrats to the incredible BTC team. Onwards we go. Another interesting data point from Unchained, the percentage of circulating Bitcoin that has been held for 6 months or more has nearly reached all-time highs. This often precedes strong moves to the upside. A supply squeeze may be imminent. And if we connect that with the clip that we were playing earlier, as that gentleman was saying, 90% of people right now, if my memory serves me correctly, are selling at a loss, right? And what do we see in every single capitulation moment in Bitcoin's history? We see the same patterns. The only difference this time is that it's a lot more public because it's public companies involved. Saylor built an entire marketing strategy off of never sell your Bitcoin. So when he changes that marketing strategy to make sure you have more Bitcoin than before, obviously that spooks the market a little bit. And as you could tell, as I also told you guys about when they sold 32 Bitcoin, I told you guys that what he was doing is that he was just teasing the market a little bit so that they would get used to the idea of Strategy selling Bitcoin. And then a couple weeks later or a month later, what happened? Strategy sold a whole lot more Bitcoin, but look at the price volatility and the difference. When Strategy sold 32 Bitcoin, it caused a lot more downward sell pressure than the recent sale, which was significantly more Bitcoin. So it tells you that the market has already digested the idea of Strategy selling Bitcoin, which I think is a good thing. The next thing I want to bring up as well is just in $200 billion VanEck expects Bitcoin to be materially higher in a year. VanEck's Matthew Siegel, which I believe we just saw in the clip, is advising clients to gradually build their Bitcoin positions over the coming months. I completely agree with that. What have I been personally been doing, in this bear market? Every single day, I stay humble, I stay solvent, and I stack sats. That is literally the best strategy. As we approach the end of the cycle, which if the 4-year cycle holds should be around October, then that's where I'm looking to be a lot more aggressive. I'm buying every single day regardless because no one knows. Bitcoin can reverse. It's important to be humble enough to understand that. But simultaneously, we can't just disregard the 4-year cycle entirely. You could call it, I've seen people say this, on X, they're calling it a meme. Memes are extremely powerful. And it kind of becomes this self-fulfilling prophecy. If enough people believe in the 4-year cycle, especially the whales, it kind of plays out by itself, right? And then I think there's more implications to the 4-year cycle being true. If the 4-year cycle plays out like it always has played out, like it's currently playing out, then that should give you an indication of if you have spare cash, when you should deploy the rest of it. I'm not saying that, again, you shouldn't be buying every day. That's what I'm personally doing. But you're looking at October and you're saying, okay, we're at October here. We haven't gone lower. We're still at the 60K region. I'm going to be a lot more aggressive in buying Bitcoin because, again, it's inconceivable for me to believe that we're going to be at these price levels in 2027. It's very difficult for me to believe that. So, I don't want to say I told you so, but I have been saying it. If you guys have been tuning into the show, I've been straight on this. I was getting beaten up by Opti when Walker came on the show, and I was like, we topped in October. 2026 is going to be a bear market year like every other midterm year in Bitcoin's entire history. And that seems like what's playing out. I think the only question on everybody's mind is how bad is this bear market going to be? So far, we've gone down 50%. The question is, are we going to go lower? Are we going to go down 60%? Are we going to go down 70%? I think that's the question. Nobody has the answer to that. If they're telling you, they're lying. No one knows. But what you could do as an individual is, again, time is on your side. The next halving is coming up. People continue to buy huge amounts of Bitcoin, and there's only 21 million. So eventually, sellers are going to be exhausted, and like a beach ball held underwater, eventually what happens? That thing explodes to the upside. So we've seen this movie play out time and time again. If you're one of the part of the new classes of 2025, welcome to the show. Welcome to the Bitcoin roller coaster. We don't call it the Bitcoin roller coaster for no reason. And one bit that I want to add as well is this conception that somehow volatility is bad. Like, don't expect the upside if you can't handle the downside volatility of Bitcoin. And if you're new here, it used to be significantly worse. We would have 50% price swings in a day. This is nothing compared to the, when I personally got in, which is around 2016, the volatility was madness. I enjoyed it. I liked it. It was great. But if you're, complaining, or if you're angry, if you're upset about, 50% price swing in 6 to 7 months, that's nothing. Bitcoin used to swing that way in a day. So volatility is your friend. If Bitcoin only had, let's say it was only down 10% or 20%, that limits the upside. You're not going to get the crazy upside if you don't have the volatility to the downside. And one more thought on the whole strategy thing, because I think Saylor, two things. One thing was working against him. Specifically, it was his marketing strategy, which was, again, never sell your Bitcoin. And then the other thing is Saylor is paying his dues like the rest of us have. And I have found myself in many positions, especially with my early days in Bitcoin, where I had the same mentality. Just never sell your Bitcoin under no circumstances. Now, I've been humbled by the market like everybody does. Hodling isn't easy as much as people tell you it is. It isn't. It's like super emotionally taxing, psychologically taxing. I would even say spiritually taxing. It's not called paying your price of tuition and earning your stripes for no reason. Like, it takes a toll on you. You know what it is to have 50%, if you're a hardcore Bitcoiner or you're a maximalist, 50% of your net worth just disappear over 6 months? You know what that does to your mental health? Especially if it's the first time. If you get used to it after a while, you're like, yeah, it's just Bitcoin. But if it's the first time, what you should really be doing is you should be doubling down. Not financial advice, but it's something that I've done over the last, years that I've been in this market. And what's one last bit before we enter the numbers segment? We have tons of content today, by the way. We have the CEO of Ocean joining us, and we're going to be talking about BIP 110. Spicy, but it's going to be great. It's going to be a fantastic conversation. Really looking forward to it. Ocean's literally one of the best mining pools on planet Earth. Highly recommend you guys check them out. The way they approach things is extremely unique, helping decentralize the Bitcoin mining ecosystem, which is very necessary because there's really only a couple, two big mining pools. But my message to you is this, guys. If you're here as a tourist, you've probably already been shaken out by now. If you're here because of conviction, because of revolution, because you fundamentally believe that Bitcoin is going to change the world, it's going to allow individuals to take back their financial sovereignty by taking their Bitcoin into self-custody, then this is a 50% discount. This is a 50% discount that you could take advantage of. And if you frame it in your mind that way, these times are a lot easier for you. If you frame it in your mind as like, oh my God, I'm 50% down on my investment in Bitcoin, then of course you're going to get shaken out. Of course you're going to look at SpaceX and you'll be like, oh my God, look at that shiny new toy, or look at this AI company that just went public. Let me just buy their IPO. Of course you're going to look at other alternative investments. But this is where I think people lose the plot. None of those investments are going to give you the sovereignty that Bitcoin gives you. And this is why we're here. And this is, I think, the lesson that was forgotten this particular cycle specifically, because this particular cycle was driven by Wall Street. It was a Wall Street cycle. You had the rise of the Bitcoin treasury companies. But the Bitcoin culture really took a hit. A lot of us forgot why we are here. And because the cycle topped on apathy rather than euphoria, a lot of us got disillusioned. Because the last euphoric moment we've had in the Bitcoin industry was back in 2021. So imagine waiting 5 years and Bitcoin still didn't meet your expectations. Of course you're going to be disillusioned. And I would say that disillusionment is your opportunity. The moment Opti brought this up to me, maybe he said it half jokingly. My wife brought this up to me. I have had OG Bitcoiners bring this up to me as well. I have a smile on my face because that is the perfect moment when everybody loses interest in Bitcoin, when everyone thinks that Bitcoin can't go any higher, when everyone gets bored and they leave and they're tired of the sideways chop action and all of that stuff. That, historically speaking, happens to be the most opportune moment to stack sats. Always has been. So you got to ask yourself, are you going to see this as an opportunity, or are you going to see this as like, bro, I'm 50% down on my backs? We've all been there. We've all been there. We've all been there. Every single Bitcoiner that's been in this industry and this just holding Bitcoin for multiple cycles, we've all been down more than 50% in dollar terms. But you shouldn't be denominating your net worth in dollar terms in the first place. Your life will get significantly easier if you start denominating your net worth in Bitcoin. If you are to take something away from today's show, take that piece of advice. If you start denominating your net worth in Bitcoin terms, everything around you, including housing, cars, food, whatever it is that you like to spend on, will get cheaper as it relates to Bitcoin. The problem is that when you denominate your net worth in dollars, the exact opposite happens. Everything around you gets progressively more expensive because of inflation. So what should be your goal? Your goal should not be increasing your net worth in dollar terms. Your goal should be increasing your net worth in Bitcoin terms. How much Bitcoin do I have? Do I have more Bitcoin today than the day before? If you're approaching it that way, it's a much better place to be in, mentally speaking. And these cycles are going to be significantly easier for you. And specifically years like this year, they're going to look like opportunities in hindsight. You're going to be like, wow, do you remember in 2026 when we could have bought a coin for 60K? Do you remember that? Like, that was such a no-brainer. I remember this. When Bitcoin went from 20K to 3,500, I was like, dude, $3,500 Bitcoin. When Bitcoin went from 69K to 16,000, same thing, same lesson. Like, you could have bought a Bitcoin for $16,000. This is that type of year. This is that type of year if you have the conviction. If, again, you're here for the mission and you're not here just purely for number go up and for the investment. So just some words of wisdom. Let's see if the 4-year cycle plays out. The fact that we've made it over the summer, and again, we're channeling, like I said, between 60 and 80K is a very positive sign. Let's see what happens in August, September, and October. Let's see what happens. Anyways, guys, it's going to be a fantastic show. So many things to cover. Like I said, we have the CEO of Ocean coming on later. We're going to be talking about Clarity Act. We have an update for you guys that there's a really big push to get clarity across the finish line because it is a race against time. It is a race against time. The midterms are coming up in November. It is expected that Republicans are going to lose the House. Looks like they're going to keep the Senate. But if they do lose the House, clarity is not going to go anywhere. So let's see if it does get across the finish line. And if we do have time to cover this before our guest joins the show, I do want to talk this awesome clip coming out of a Binance executive talking about how 7 in 10 Europeans are picking their own self-custodial wallets over leaving their Bitcoin on exchanges. And I think that has to do with the fact that the MiCA regulations had unintended consequences, and I think that they're doing the exact opposite of what the politicians had intended, because I think the intention of MiCA was to keep more coins in the hands of intermediaries, not in the hands of individuals taking self-custody. So it's going to be a fantastic show. We have tons to cover. You guys are going to want to stay tuned. We're going to be right back just after the quick break.
Here's the part that nobody says out loud. Buying Bitcoin on an exchange and leaving it there isn't buying Bitcoin. It's buying an IOU. And the last decade has been a masterclass in what happens when those exchanges don't deliver on their promises.
Bitcoin Well is a self-custody Bitcoin platform. That means that when you buy Bitcoin, it goes straight to your self-custody Bitcoin wallet. You actually own it from the very first transaction. They're available both in the United States and Canada. Pricing is transparent, straightforward, and no nonsense. And if you're buying a larger amount of Bitcoin, Bitcoin Well Infinite gives you concierge-level support through a dedicated executive Bitcoin advisor, premium help for when it actually matters.
You can also stack a little extra through the referral and wishing well rewards. A nice bonus on top of the owning your own Bitcoin thing. So go to bitcoinwell.com/simply and sign up for the Bitcoin Well portal today and buy Bitcoin you actually own. Paper burns. paper floods, paper fades. If your seed phrase is written on paper, it's not really backed up. It's waiting to disappear. Stampseed's DIY kit lets you hammer your seed words directly into commercial grade titanium. Fireproof, crush-proof, waterproof, and permanent. Once your words are in the metal, they aren't going anywhere. Use code SIMPLY at stampseed.com for 15% off anything in the store. That's stampseed.com, code SIMPLY.
We are back, and at the time of recording, the Bitcoin price is $63,980. Nice little bit of a bounce there. I like that. Block height 957,453. Market cap 1.28 trillion. Bitcoin versus gold market cap 4.26%. Decline from all-time high. Again, if you're seeing this as an opportunity to stack sovereign money, you're getting it right now at a 49.3% discount, which again, you're going to be looking back on. You're going to wish that you had that opportunity. Anyways, so quick update on the Clarity Act. It's been talked a lot about on legacy financial media and just legacy media in general. This is a big prerogative for the Trump administration. They really want to get this across the finish line. Of course, I have to give credit to Senator Cynthia Lummis. She's really been driving this forward. About the importance of this act getting passed specifically in the United States. Again, this is going to be extremely bullish for Bitcoin entrepreneurs and Bitcoin companies in the United States, so we don't find ourselves in an Operation Choke Point 3.0 type of situation in the future because of a different administration. So it's important that this legislation gets signed into law. Is it important for the Bitcoin protocol as a whole? Is it important for you as an individual Bitcoin holder? Not necessarily. I mean, it does have language in the bill that would protect the right to self-custody. It does have language in the bill that would protect open source wallet developers. I think that's incredibly important because I think that's one of the things that they will attack in the future. So I know it's not perfect. I know that there's been a lot of compromises made. I know that most of you guys as Bitcoiners are just anything that the government does, you're skeptical of, and I think rightly so. But again, I think that this would be a big win because the more Bitcoin gets integrated into the U.S. financial system, it's like a Trojan horse, like to be honest with you guys, to be blunt, because the more companies are benefiting from Bitcoin, the more the financial system is benefiting from Bitcoin, the harder it's going to be for the adversaries of Bitcoin to reverse that. And this is exactly why Elizabeth Warren fears this. And she said it herself at the Senate Banking Committee meeting. She's like, this is going to destabilize. That's her, this is going to destabilize the financial system. No, what she really means is this is going to change the current financial system, which politicians have complete control over. That's what she means if we're interpreting the words. Of course, this is just my opinion. But anyways, no more delay. Let's check out this clip, and then we will talk about it. Let me pull it up. Let me share my screen. So let's check it out here. Let me know if you could hear.
Investors, regulation for this space. And I can tell you firsthand, as a former senior regulator at the SEC, we believe and we embrace the importance of regulation because regulation and clarity in this space is going to protect investors, it's going to foster innovation, and it's going to allow the U.S. to lead in this space. And so I'm greatly encouraged by what we are seeing with the Clarity Act because it has that vision in mind. It has customer protections in mind, and maybe even more importantly, it is a bipartisan effort because what we are seeing on the ground is a concerted group of Democratic and Republican senators working around the clock to get this across the finish line.
Yeah. No.
Regulation for this space. And I can tell you firsthand, as a former senior regulator.
So, I mean, you heard it from the horse's mouth himself. This is the Coinbase vice chair. Again, pushing. Coinbase has done a good job. I know a lot of you guys are not fans of Coinbase. It's an altcoin casino, but to give them credit, they've really put their hat in the ring in terms of the Clarity Act. It's unfortunate because a lot of the DeFi stuff that we don't care of as Bitcoiners kind of gets mixed into the bill. Yeah. Anyhow, let's look at the poly market odds because I think it's important to focus on this specifically. Poly market odds are not very favorable. 38% chance right now. The betting markets believe they give it a 38% chance, 38% chance that this thing passes in 2026. So we're really running out of time here. And it's unfortunate. I've mentioned this to you before, and you guys were a lot of you guys were disagreeing with me, but it's unfortunate that the Iran conflict happened because it burnt a lot of political capital for the Trump administration. And I was upset for two reasons. Number one, I felt like it was a betrayal to the voter base. And number two, it was because I inherently knew that the opposing political party was going to use that as ammunition to stall this bill. And then it doesn't help that, all these disclosures started to come up that showed that the Trump family benefited tremendously from, the industry where a lot of people got burnt. So because of those three factors, it's like, I feel like if they just focused on getting this across the line rather than starting another conflict in the Middle East, I think that the probability of this passing would have been significantly higher. So it's unfortunate, but that's just the way that the U.S. legislative process works. It's very difficult just to pass these single bills. Like everything just gets kind of clumped together. So let's see. We have our fingers crossed. I know that a lot of you guys are just like, it doesn't matter. And ultimately, it doesn't matter. Like ultimately, if Bitcoin needed regulation in order to function, it would literally entirely defeat the purpose of Bitcoin. It's not that governments are going to regulate Bitcoin. It's that Bitcoin is going to regulate governments because it provides a check on power. To use Christine Lagarde's own words, it's an escape valve. If your government starts debasing the currency too much and it starts to materially impact you, you opt out. And you don't opt out for ideological reasons. You're not watching Simply Bitcoin every single day and you're like, oh yeah, end the Fed, separate money from state. No. You're not doing it for any of those reasons. You're doing it out of necessity. So Bitcoin doesn't need this, but it would be very positive for Bitcoin businesses in the US. And I believe it would be positive for number go up. This is the type of news, if Clarity Act passes, this is the type of news that we could see like a 10, 20K pump on easily. So let's see what happens. Of course, you guys know we've been covering this for a while now. But yeah, anyways, guys, we're going to be right back just after the break. We have the CEO of Ocean joining us in about 15 minutes or so, which is going to be great. It's going to be a fantastic conversation. Really looking forward to that. But before we get to that, I do want to cover some news coming out of Europe. So you guys are going to want to stay tuned. We're going to be right back just after the break. I want to give a shout out to our partner, Ledn. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledn fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledn's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledn's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledn. If you ever thought, what happens to my Bitcoin if something happens to me? Or what happens if I lose my phone? You're not alone. For a lot of people, the biggest barrier to self-custody isn't buying Bitcoin. It's the fear of making a mistake. And that's why I like Bitkey and I recommend it to my friends and family. Bitkey is a Bitcoin wallet built for real life. Not just for day one, but for everything that happens in between. Lost devices, upgrades, accidents, and long-term ownership. There's no seed phrase to write down and worry about losing. nothing and no single point of failure that can lock you out of your Bitcoin forever. What really stands out about BitKey is the peace of mind. Recovery is built in. Inheritance is built in. It's a complete self-custody system built by the team behind Square and Cash App, designed to make holding your own Bitcoin simpler and safer. Take self-custody of your Bitcoin today using BitKey. Go to bitkey.world and use promo code SIMPLY for 10% off your new BitKey. That's bitkey.world, promo code SIMPLY. Everybody, look, at the end of the day, if it's not Bitcoin in your custody, it ain't your custody. It's not your Bitcoin. It's just not your Bitcoin at all. So what are one of the first steps to do that? You got to get yourself a hardware wallet. We recommend the BitKey at Simply Bitcoin because it doesn't sacrifice security or sovereignty, has multi-sig built in. The new BitKey device has an LED screen on the back so you can verify the address. It pairs perfectly with the BitKey app, and it makes it incredibly easy to take self-custody. I can't emphasize that enough. So go to bitkey.world today, use the promo code, and take self-custody of your Bitcoin. This is the perfect gift to give to somebody that's like, I don't know about self-custody. BitKey makes it incredibly easy without sacrificing security or sovereignty. All right, everybody. So let's get into this. Some news coming out of the EU. This is interesting. This Binance executive had some very interesting things to say. Let's play the clip and then we'll talk about it.
Just as an interesting anecdote, right? So of the users in EU that we have that subsequently withdraw their funds of our platform, 70% of them, of those funds go to self-hosted wallets. Only 30% flows to MiCA regulated entity. So that is pretty interesting from a regulatory angle, because I'm an ex-regulator, so I can say that. Does the MiCA regime then serve its purpose to make sure that you minimize risk for the users, because once it goes into self-hosted wallet, the risk actually amplify. You don't have proper oversight of those. You don't have proper, AML, KYC controls over those. So is it best served by that, or is it better served to regulate a fully compliant entity that works very closely with regulators to uphold the rule of law? And I always say that it's better to bring companies into regulations. Then you can have proper oversight over them. Yeah. Make sure there's full cooperation, full data of the users, etc. But, we continue to work very closely with regulators in Europe on that.
So, very interesting take there. Of course, he has to say the part where he's like, Bitcoin that's not, the Bitcoin that's in self-custody somehow has more regulatory risk. He has to say that, obviously, because he runs a regulated entity. He can't just say, self-custody is better. He has to say that. If not, the regulators in Europe, which have been extremely aggressive, I think would otherwise weaponize his words against him. But the most important data point that I'm getting out of all of this is, and I'm going to give Merhelin, the trader, credit because he's the one that says it. Given the choice, 7 in 10 Europeans pick their own wallet over a regulated exchange. Binance's own data of the funds that left after MiCA, 70% went to self-custody, only 30% to licensed platforms. The CEO calls that risk. No AML, no KYC on those wallets. Of course he does. He runs the platform they left. Self-custody isn't the risk in that sentence. It's the verdict. That is so powerful. Because these are people that are voting with their wallet. I'm saying, nah, I see where this is heading. I don't like it. I'm going to reclaim back my power, my sovereignty, my wealth, my money, so that's determined. I am the master of my fate, not a regulatory entity. And we talked a lot about MiCA, and we played you guys clips of Christine Lagarde going over the moon. She was so hyped about the MiCA regulation because she thought that it would do the exact opposite of what's happening. But if you give people a choice, which, by the way, I think this is the next step, the next evolution, and they're going to come up with, it's about saving the children or some crazy stuff like that, like they always do. The next step is basically saying, listen, guys, I'm sorry, you can't take self-custody at all because there's just risks and stuff. Don't let anybody gaslight you into thinking that somehow you, as an individual, taking full, complete control over your money is dangerous to society. That is crazy talk. That is crazy talk. And I'm calling it, eventually that's what they're going to do. Because I think that they thought that because of these regulations, I think that they thought that it was going to be harder for people to take self-custody. It was going to de-incentivize people from taking self-custody. But it looks like it's done the exact opposite, which again goes back to what we've always been talking about. The reason Bitcoin's going to win at the end of the day, ultimately, when everything is said and done, is because we have incentives on our side. If human beings had a choice between slavery or freedom, historically speaking, they always choose freedom. And if you have a hostile system that continues to ask for more information, this is a perfect segue to my next bit, by the way. And we had the fellows from Bull Bitcoin joining us yesterday, and they sued the French finance ministry over global surveillance database. You see all these new breaking news stories in France, literally about people getting $5 wrench attacked. And where are they getting this information from? So again, I'm going to stick to what I've been saying for a while now, which is, if governments could regulate Bitcoin, it would defeat the purpose of Bitcoin. And the number one thing that you have to remember as an individual is the most powerful vote you can make is taking your Bitcoin into self-custody. And if enough of us do it, we win. It's as simple as that. There's really not, it's not complex. Anyways, guys, right after the break, we have the one and only Mark, the CEO of Ocean, and he's joining us today. Ocean had an incredible announcement a couple days ago. We're going to play you guys the video. We have Mark on the show to talk about it. It's going to be fantastic. Stay tuned. We're going to be right back just after the break. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy across 3 continents, HIVE runs dual engines, Bitcoin mining and AI compute. Their AI platform is ranked #1 in the world for network performance, and it's doing something bigger than compute. It's accelerating human discovery, the science, the breakthroughs, pushing humanity further and faster. Listed on the NASDAQ with the ticker HIVE. Catch the latest buzz at HIVE Digital Tech on X or hivedigitaltech.com. You secured your Bitcoin, but did you secure your devices too? They're still broadcasting your location and digital footprint. GPS, Wi-Fi, Bluetooth, cell, 5G, EMF, all of it is leaking. Escape Zone fixes that. Their Faraday bags block every signal your device emits, so you decide when you're detectable, not the grid. Built for Bitcoiners who know sovereignty isn't just your wallet. It's your phone, your hardware wallet, your keys, and your entire digital life. Go to escapezone.com/simply and use code SIMPLY for 10% off. That's escapezone.com/simply, code SIMPLY. Everybody, we are back. Shout out to the YouTube audience, the X audience, and the Rumble audience. We got Mark, the CEO of Ocean. How you doing, Mark?
I'm doing well, Nico. How are you?
Good to see you. Good to see you. Ocean had a huge announcement this week. I'm going to play you guys the video, and of course, we have Mark here to talk about it. Let's check out the video. We'll be right back.
Hi, everyone. I'm Mark Artymko, president and co-founder of Ocean. Over the past several weeks, we've seen a strong uptick in interest from miners looking for a simple way to express their support for BIP 110. We've listened, and today we're launching a second Stratum endpoint for BIP110 signaling. Up until now, Datum has been the primary mechanism for block construction and optional signaling on Ocean. Datum gives miners full control over how blocks are built and whether or not they choose to include signaling in the blocks they find. This update simply adds another option for miners who need a dedicated endpoint for signaling. At Ocean, we believe miner sovereignty is essential to Bitcoin's long-term success. Miners should have a voice, and we're building the tools to give them one. Thank you.
Love that, Mark. So let's break down what the significance of this announcement was, how much of a game changer, how most of the mining pools operate, how Ocean differentiates itself. Walk us through what exactly changed, what exactly did you guys announce, and why is this an important milestone?
Yeah, first, I'd like to give a shout out to my buddy Steve Barber over at Upstream Data for pointing out the fact that I was standing in front of a lake, not an ocean. So next time I'll have to do that on an ocean. But essentially, what we announced a couple of days ago was the creation of 2 new Stratum endpoints for our miners that use our SV1 template, and this was essentially designed to give and provide miners with more choice over their preference or not for the upcoming BIP110. And it's an upgrade not only to the way Ocean was constructed previously, but also compared to some of the other mining pools. And just to maybe give some context on who this actually impacts within Ocean, I'll just give a brief background on Datum, if that's okay, Nico.
Absolutely.
Right on. So, okay, so Datum is essentially the core tool that Ocean created about 2 years ago. When we launched the company in 2023, there was massive mining centralization in Bitcoin. You had, 3 or 4 large mining pools basically constructing essentially all of the block templates on behalf of all of the miners around the world, and that presented centralization risks. And we saw that the more sustainable future for Bitcoin long term was that if the blocks that were constructed were actually constructed in a sovereign way by the miners who provided the hash power. So we set out on a journey to create a tool, which eventually became known as Datum, stands for Decentralized Alternative Templates for Universal Mining. And Datum gives essentially all of the tools that the pool typically does in the block construction back to the miner. The miner runs their own node, whichever one they want. They populate, or they build their own mempool, they populate it with their own transactions, again, according to their own preferences. They set their own policies. They brand the blocks, and they even communicate. When they find a block, they communicate it to the network, sometimes before they communicate it to Ocean. And what we've done is we've reduced our role in that ecosystem from being a gatekeeper of everything that goes into the blockchain to a reward split coordinator. And this was launched successfully 2 years ago, and today we have over 90% of the pool running Datum, and it sort of oscillates. Some days it's depending on how big the pool is with curtailment and whatnot, but it's somewhere between 94 and 96% of the pool is using Datum, and all of these miners are making their own choices, including one of those choices is whether or not they choose to signal for a soft fork. And so we've seen a lot of miners using Datum to find blocks, and those are visible on the blockchain. But we still have a smaller subset of customers, about 1 exahash or so. So that's like the 5% that aren't using Datum, that previous to this announcement, they didn't have a choice. They were just using the template that we provided. And so what we wanted to do is, again, building on the concept that it's your hash, your choice, we wanted to give these miners who weren't using Datum the ability to signal their support or not for the upcoming BIP, because we thought it's essential and important that every miner who has a voice has the means to exercise that voice. And to contrast this with every other mining pool, like this is what the milestone is, because every other mining pool essentially runs, they run their own Stratum server, they make their own block, they They build the block template according to their preferences, and they give that template, that work, to the miners. So on all of the other pools, miners don't have a choice either way. And we felt it was important to give them that choice. And so that was the main announcement, and that was the motivation behind it. There has been some pushback on kind of like some of the elements of the announcement, but that was essentially the motivation.
I love it. From my perspective, just covering the Bitcoin ecosystem as a whole, Mark, you guys are really the only ones that are pushing forward the mining decentralization problem. Like, you guys are actually actively trying to fix that. I don't see anybody else who's put in the work, put in the time, put in the proof of work to, again, really solve this issue, right? And Mark, correct me if I'm wrong, that this was originally how Bitcoin was intended to be used, right? It wasn't the pools that were the ones that were deciding how blocks were being built. It was the actual miners themselves. So could you walk us through how that has changed and how you guys are trying to solve that?
Yeah, in the early days of mining, and again, this was before my time. I joined around 2021, but in the early days of mining was essentially done at the CPU level, and everybody who ran a full node was essentially a miner. There was actually a button called Get Bitcoins, and so you had a node, and you did all the things a node does. Download the blockchain, validate transactions, or validate blocks. And then if you wanted to participate in mining using your CPU power, you just click the button that said Get Bitcoins, and then you would essentially start mining using your hash power, and the node itself created the block template. And this was, when Satoshi in the white paper refers to nodes, like a number of times. I think it's like 8 or 9 times he talks about like honest nodes and talks about attack vectors and things. But in each of those instances, or many of them, he's actually referring to the mining process of being a node. And so as difficulty increased and more people were sort of jumping on to the mining industry, it became not practical to solo mine in this traditional sense, because you might have to wait around for months and months to hit a block, and that wasn't able to pay off your devices. So a couple of pools sort of launched out of necessity. The first one was Slush Pool, and the second one was Eligius, which was launched by my colleague and co-founder Luke Dastier. Luke created Eligius, I think, 3 or 4 months after Slush, and those pools were designed to solve for the cash flow, like allow miners to pool together their hash rate and then split the rewards. And Eligius actually grew in dominance. At one point, I think there were about 20% of the network. So it was a very, very popular pool back in like the 2016, 2017 era. And then the pools continued to get more and more, dominant, and different players emerged, and some players fell off. But they've kind of like grown into more of a centralized, controlling ecosystem, where you have, if you look at mempool space, you could see the amount of hash rate that each of the pool has, and even some of the pools have sub pools that are essentially working on the same templates. So Bitcoin mining is not really decentralized. It's decentralized at the hardware level because you have hash rate all over the world. But if everybody's working on a template that 3 companies decided were the correct template, then it's really not decentralized. So the only way to really eliminate that attack vector is to take the function away from the pool and give it back to the miners. And that's what Datum accomplishes. And we're sitting here 2 years in. We've hit I think over 1,000 blocks on Datum. So the technology is working. Miners are loving it. They're loving it for the sovereignty, to be able to put their own transactions in. And there's a lot of things you can do. Like you can populate the block with your own transactions if you want for 0 fee, or you can prioritize a transaction that based on its age that normally wouldn't make it into the mempools of the large pools, because that's your preference and that's your right as a miner. Like you're the one who invested the tens or hundreds of millions of dollars in your equipment. You should be able to do the thing that you're designed to do. And so Datum really just restores that agency back to the miners. including the ability to signal for soft forks, which is something I don't, before Datum, I don't think that function actually existed. So it's a good tool to gauge industry sentiment by being able to see what the miners are thinking about it.
Absolutely. And again, like the way that I'm seeing it is it's just going back to how Bitcoin was originally designed in terms of the mining. Like the mining pools came out of economic necessity. What I think what you guys are proving is you could still mine with the pool, but you don't have to sacrifice your sovereignty by using a pool. And I think that you guys are literally the only people working on this, and it is a real problem. I think it's like 2 or 3 pools make up more than 50% of the network hash rate at this point, and they don't give you these tools. They don't give you these choices, right? So another thing that I wanted to take advantage of the fact that you're on the show here today, Mark, is for viewers who may be hearing about BIP 110 for the first time, what is it, and why do you believe it deserves the industry's attention?
So BIP 110 it's a proposal to, it's a soft fork proposal to tighten Bitcoin's rule set at the consensus layer to be more restrictive of non-monetary data. Essentially, in a Bitcoin transaction, there's various fields that can be used for information, and among other fields, op return is the one that's kind of getting all the attention. But essentially, Bitcoin for its 18-year history has operated with a pretty hostile attitude towards non-monetary data, like a peer-to-peer electronic cash system kind of, is is sufficient of an explainer to say that Bitcoin is money. And so there's been some changes made in the default reference implementation to sort of expand Bitcoin's usage to be a little bit more permissive of non-monetary use cases. And so BIP 110, as I understand it, is designed to revert those changes back to the way Bitcoin's always been by capping the op return limit from 100,000 bytes back to its original setting of 83 bytes, which is designed for metadata, hashes of files, and things like that. Almost like if you could think of a check, the op return is like the memo field on the check. And instead of letting somebody write all over the check and draw a picture, you're just saying, no, you can only write in the memo field. And there's other fields and there's more complicated technical elements to it, but that's kind of the core issue as I see it. And I think it's important because there's from my perspective, Bitcoin is money, and we're in year 18 of the next 1,000 years of money, and I want it to stay money. So that's where I stand.
Absolutely. And I agree with that as well, right? Because like ultimately, I think I'm not necessarily a technical guy, I'm a media guy, but from my understanding, right, like Bitcoin is money, right? And I think that the more complexity you add, I think that increases the resource requirements in order for you to run a node. There are other implications as well. So yeah, I mean, on a fundamental level, I agree with you. Like Bitcoin should just be used as money. And one of the other things too, Mark, that I want to talk about as well is regarding the recent announcement, because there are some big changes that you guys are going to implement. I think it's beginning July 15th. What's the thinking behind that design, and what does it accomplish for miners, specifically regarding BIP 110?
Yeah, so July 15th it's significant in the fact that it's the date that matters internally to Ocean, but it's not really a date on the timetable of the actual activation. So as part of rolling out two templates choices, we sort of caught ourselves in the dilemma that we now have to actually pick one to be the default, because if you have two choices, only one can be the default. And so the new templates are bip110.mine.ocean.xyz, and the other one is node-signal.mine.ocean.xyz. So if you want to support the BIP, you send it into door number 1, and if you don't, you send it into door number 2. But we still have our default, which is mine.ocean.xyz. And a lot of miners are primarily using that as the backup for their data mining. And then we have, again, those 1 exahash of miners who are using it as the main mechanism. So we had to essentially pick a door. Like, is our default going to signal or is it not going to signal? And the way that Stratum endpoints work is the miners essentially delegating that choice to the pool because somebody has to choose. So we kind of like looked around the situation. We looked at what we were hearing from miners, what we were seeing, and the sentiment was that from my standpoint, the sentiment was positive towards BIP110. And I was fielding questions from, for the past 3 weeks from miners calling me up and asking me about BIP110, asking me how to signal for it, how do I change to it, all of these things. And these were like repetitive conversations and communications with actual miners on Ocean that kind of like led me to believe that there's a lot of people who aren't saying anything. And my assumption is that maybe they're neutral. And then some people are actually pro and they want to see the change. Combined with the fact that I think it's a good thing for Bitcoin to harden its function as money. And if the community, provided that the community adopts it, and that's a big qualifier, but if the community wants to go along with it, I think it's a good thing for Bitcoin. So that combined with the fact that what I was hearing at the time from our customers was that they were supportive. That's kind of what led us to that decision of changing our default. Unfortunately, the default sort of blew up online, and there was a lot of criticism and complaints about this being kind of like a trick or a coercion or something like that, where we were sort of trying to trick some of our customers into unknowingly supporting a soft fork. And I just want to let everybody know that definitely was not the case. Like, we set we had to make a choice. We chose the default, and then we intentionally gave everybody a heads up that, hey, if you don't like the default, we're giving you another option. And so the main point was to provide the choice. And in the announcement, we probably could have led with the fact that 95% of the pool already has this choice, and this is really just appealing to the 5%.
I think, Mark, like, that is really the source of the misunderstanding, right? Is like, ultimately, you still have a choice at Ocean to either support BIP110 or not support BIP110. You could choose what you prefer. By definition, that isn't coercion. You're actually giving the user much more choices than if they just used another mining pool. Is that fair framing?
It's very fair framing, and it's I think it really just goes back to the issue of centralization in general. And a lot of people don't realize that all of the other mining pools are essentially operating on a template that the pool chooses. So the pool is the miner, they're renting the hash power. So, being in this situation, offering the choice, it definitely, I think, is an improvement. Again, like I said, I probably, if I had to do it again, I would have led with the fact that this is not the standard. This is sort of considered the subset of the hash rate. But like, my personal hope is that our miners make the default template irrelevant. Like, I don't want 5% on the default. I would prefer that the miners, took their hash rate and moved it either to the BIP110 side or the other side, because ultimately I don't want to be in a position to have to make that call for the miners.
So let me just break this down, because again, I saw a lot of the misunderstandings, but it doesn't quite make sense to me because of a couple reasons, right? You guys are the only pools that are actually, you guys are literally the only pool that are actually giving miners a choice, unlike the other pools. You guys as a private company are perfectly within your right to decide, what BIP you want to support and what BIP you don't want to support. But despite you guys having your own personal preference, you're still providing your customers and clients a choice on what to use, versus the other pools not providing a choice whatsoever, I don't see where the misunderstanding came from. And the coercive framing, I would say, is very strong. I heard you say that earlier. I think coercion, if you're talking about coercion, is if you forced people to use this, you could technically make the argument and say, oh, because they're making BIP 110 the default, you're coercing it. And I don't buy that argument, because there's still a choice. And you guys are perfectly within your right to say, listen, guys, this is a private company. This is what we believe is best for the future of Bitcoin. This is what we're going to do. I don't see the misunderstanding there. I don't see the misconceptions there. I don't see, you know, the drama, right? Because ultimately, you guys provide a choice. The other pools don't provide a choice. You guys are a private pool. You guys have your own ideological beliefs in terms of where Bitcoin should go. You guys are perfectly within your right to set the default however which way you see fit. You're still providing an alternative for customers that don't want to go along with BIP 110. I don't see what the big deal is, Mark, to be honest with you. And I cover news for a living, right?
Yeah.
So
I was completely taken aback, because you know, the focus was for us, Sonny, was setting up the endpoints and providing the service and providing adequate notice. And it's ironic, but I do sympathize with the people, especially the ocean miners and the people who have supported us, who felt like they were sort of tricked. And I guess it's less an issue of the default and more in the messaging.
But
I think,
Mark, but hold on.
yeah.
Let me push back on that a little bit. Is that because of your guys' messaging, or is that because of the preconceived notion of because it is, you know, controversial, the whole BIP 110 discussion? Do you believe that came more so from the preconceived notion, or more so from your guys' messaging? Because from my chair, based on the conversation that we're having, you guys are the only pool that is actually providing sovereignty for creating their own templates for miners. You guys are actually providing a choice. That's in stark contrast to how the other pools are operating. So my pushback is, was that really a fault on your guys' messaging, or was that just the preconceived notion that the community had regarding BIP 110?
I mean, I think a lot of it has to do with the narrative that sort of took hold. So, you know, and there's a lot of comments on there, but I think the narrative of coercion, of trickery or whatnot, it kind of like catches on. So I think a lot of the criticism was just sort of piling on that narrative. And it's also just, I think, a general perspective about like, what's the alternative in the industry. And then once you realize, like you said, once you realize that the alternative is no choice at all, and this is providing with a choice, then it's pretty clear. But in any case, you know, if I had to do it again, I probably would have swapped the messaging around and mentioned the fact that it's a subset of the miners and we're providing ample opportunity and all that kind of thing. But, you know, we've spoken to folks and they understand. But I guess the good news that I don't want to get lost in all of this is we now have two templates, and miners who aren't running Datum now actually have an agency to express their opinion, and which wasn't available before and is not available on the other pools. Absolutely.
I think it's incredibly important, again, you know, as a Bitcoiner on whichever side of the BIP 110 debate you're on, ultimately, you know, and we released a video, Rustin released a video on the BIP 110, and Simply Bitcoin's a decentralized media organization in the sense that we don't have a centralized editorial voice that tells our creators what they can and cannot say regarding the Bitcoin protocol and ecosystem. I think it's incredibly healthy for there to actually be a debate and for you to ultimately vote with your node. If you agree with BIP 110, run knots. If you don't run knots. That's not my problem. That's your choice as an individual Bitcoiner. And Mark, you're coming on the show and you're basically saying, Nico, you know, we did change the default because that's what we like, but our clients have a choice on which side of the debate they want to use. Nothing really changes on the Ocean side. From my understanding, based on this conversation, that's what I'm hearing. So, you know,
think of it like this: like, you know who the other founder is, right? You know Luke, and you know,
of course,
you know his stance on all of this, and it's very strong. And for him to be able to say, yeah, but I'm not going to force the miners; they need to make their own minds up. Like that's saying a lot in terms of the concept that we espouse, which is giving the miners the choice. I remember Mechanic was on a podcast with Peter McCormick a couple of years ago, and he has this one quote that sort of lives in my head like permanently, which is, I may not agree with the transactions that you put in your block template, but I'll die defending your right to do it. And this is kind of like this is that balance of yes, we're people, yes, we have personal opinions, yes, we have a preference, and if you ask us for a recommendation, we'll give you one, but we're giving you tools, and those tools are going to let you pick your own path. And that separation is really important to not like impose our views on the miners, but to give them the tools to do it themselves.
Yeah, I'm just reading like a lot of the comments where it's just like, dude, Nico, take a side, blah, 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 blah. Like, my stance has always remained the same. It's you as in it. Listen, what I run on my node is none of your goddamn business. But I also protect your right to run whatever you want on your node. I don't care. It's your choice fundamentally. This is the beauty of Bitcoin, right? And this like groupthink, this hive mind of like, hey, Nico, you have to pick a side, or hey, Nico, you have to do this. Like, guys, that's not the way Bitcoin works. Bitcoin is built around individuals making their own choices with their own nodes. That's the whole point. That's what we advocate constantly. Run your own node, because then there you'll make a vote. So we will not censor ourselves to talk about BIP 110. Our own individual creators have different beliefs, different philosophies about Bitcoin, and they're perfectly entitled to take their own sides on this. We're not going to censor debate on this very, very important conversation in Bitcoin. And again, the preconceived notions I think are very negative for the community as a whole. I think the fact that you guys are actually allowing people to build their own templates and you know, choose how to use Bitcoin the way that they see fit based on their own beliefs is incredibly important. I don't see any other pools giving that choice. You guys are actually giving more choices. And you guys are actually taking a stance on what you believe is important for the Bitcoin ecosystem. I applaud that. And we will and at Simply Bitcoin, we will continue to platform anybody on both sides of the argument. Like the fact that you guys think that we somehow have to censor one side of the argument and not censor the other side of the argument, and us as a media entity, we have to choose sides. Sorry, guys, you don't understand what Simply Bitcoin's all about. That doesn't make sense whatsoever. And having this discussion with Mark, it doesn't make logical sense either. Because he's coming on the show and he's basically saying, listen, this is one of the biggest announcements that is helping Bitcoin mining decentralization. Everyone's like lost the plot on how important that is to solve. And they're not paying attention to the actual signals here. What is the signal? You could choose whatever you want on Ocean. Ocean gives you sovereignty. It gives you the ability to build your own blocks. No other mining pool in the world gives you the ability to do that. Ocean is actually trying to solve the problem on bringing Bitcoin back to how Bitcoin mining used to be. The Bitcoin mining centralization problem is a big deal. I can't emphasize this enough, guys. Like, it's not good that 3 mining pools make up more than 50% of the Bitcoin hash rate. And another conversation, the way that I want to steer this, Mark, is even if Ocean becomes 50% of the network hash rate, it's still decentralized. Could you explain the technicalities behind what the statement that I just said? Because I think this is something that gets lost on people. We actually want Ocean to grow because that is going to increase mining decentralization. Even if Ocean makes up 50% of the hash rate, how is that going to improve decentralization, Mark? What are the technicalities of that?
So I'll first describe how a traditional pool works, and then how Ocean's model is architecture is different to kind of like weave into that answer. So the traditional pools, they do a number of things in the mining process, the pool and the miner collaboratively. So they run a full node to peer with the network. The pool within that full node builds a local mempool of transactions that they're basically relaying and storing. They build a block template that essentially is a subset of their mempool, which is the transactions that they think should be in the next block based on their criteria. Usually it's prioritized for fees, and sometimes it's different depending on who the miner is. And then after that that template is created, that template is given as a job to the ASIC on the mining rig in the Stratum V1 or Stratum protocol language. And then the miner hashes, and then that's when everybody thinks about mining, that's where they think that it starts. It starts at the hashing. It actually starts way back earlier at the full node level. And so everything I mentioned before is the intelligent parts of mining. That's the blueprint design. That's deciding what goes in the blockchain. And then once it's given to the miner, it's essentially brute force hashing to confirm what was already pre-decided by the designer. And in those pools, and this is, you can come up with a whole bunch of nefarious scenarios, but if a pool wanted to censor a particular Bitcoin user or set of Bitcoin addresses from transacting, they could just simply not include transactions from those addresses. So they could censor, they could do 51% attacks, they could do reorgs, they could do all sorts of things because they control the template. And we're talking about 3 pools, right? Two of them, which represent over 50% of the network. So essentially, they team up, and Bitcoin is not censorship resistant today. It just happens to not be censored by the people who could pull it off. So to contrast that model with Ocean, we've taken everything in that intelligent part of mining, and we've put it back into the purview of the miner. So the miner runs the node. They build their own block template. They construct their mempool. They set the policies. They build the template. They provide the hash power. And then what do? They start hashing on that, and they send hashes to Ocean to sort of prove that they're doing work, right? And Ocean says, okay, Nico's sending us a bunch of hashes. His hashes represent 10% of the pool. Somebody else is sending us, 90% of hashes. And so what we do as a payment split coordinator is we say, all right, if any of you guys find a block, we want you to pay Nico 10% of your block reward in your Coinbase generation transaction. And Nico, if you find a block, you pay yourself 10% and you pay everybody else 90%. And the pool, we don't have the ability, the physical ability to tell you no. As long as what you're doing is consensus valid, we cannot tell you no. And so if we wanted to censor a group from using Bitcoin, we couldn't do it because we're not the ones making the blockchain. And if somebody came to us and said, hey, we need you to censor these groups, we're like, all right, well, we don't control the blockchain. We don't control the block templates. Our miners do. And by our miners, we mean these 5,000 Bitcoin addresses. Those are the miners who are doing the work. So the threats, even if Ocean were to grow to 100% of the network, the actual intelligent parts of the mining still aren't being done by us. They're being done by the individuals who are making the block templates. And so the pie chart that we all know that has, Foundry, Antpool, F2Pool, and the others, that would actually just appear as a pie with 1,000 slices. And each of those 1,000 slices represents some sovereign miner somewhere in the middle of nowhere with a megawatt or 10 megawatts or 100 megawatts worth of hash power, making their own blocks, providing their own hash power in a sovereign way where nobody can tell them no. And they're all just participating with each other to basically coordinate the payout splits. And so Ocean is, if you could think of Ocean less like a pool and more like a payout split coordinator among solo miners who are, choosing to work together.
And to clarify here, also to provide a little bit of clarity for the audience, right? It's no custody and it's permissionless. Is that right, Mark?
Yes, it's permissionless. So there is to join. You just essentially all you need is a Bitcoin address, and you direct your ASICs to the template of your choice, which we now have two. It's BIP110 or it's no signal. And you can also use Datum. And in your Datum node, your Datum node is the miner. So in your ASIC, you direct it to the IP address of your gateway in your house, essentially. But your user is still just a valid Bitcoin address. So when you start mining in either of those two scenarios, it just takes a couple of minutes to get set up. You just appear on our website as another miner. And it's like, oh, hey, there's another miner. He's got an exahash. Do you know who it is? I have no clue, because there's no sign up. There's no information that gets requested. There's no gatekeeping. There's no permission. And to your other point, when the block is found, in the generation transaction, Bitcoin natively has the ability to pay miners directly in the block. The way the other pools work is that Bitcoin pays the pool takes custody, and then they pay their miners based on how much work they did after the fact, usually once per day or something. With Ocean, all of that dissemination of rewards happens in the block itself. So you'll see, if you look at any of our blocks on one of the block explorers, you might see anywhere from 16 to 60 addresses in the generation transaction. And those are all of the miners who did the work. And those are miners paying each other, not Ocean paying those miners. And because that's happening, we're not taking custody of those coins. And so that's what makes us non-custodial. So,
okay, so let me get this straight, and let's back it up a little bit. All right, you guys made an announcement earlier this week. By the way, I do agree, and I told this to Nacho as well. You should have totally done it in front of the Ocean. But other than that, I don't see what the drama and the controversy is about, because from my perspective, I cover geopolitics, I cover regulations, I cover all of this stuff. I would like to say I'm pretty well versed on it. You guys have seen me make calls 6 months or a year or 2 years before anyone has noticed it. And that's just it's not because I'm a genius, just because I literally have to read the news every single day. Ocean is the only mining pool that's offering this type of capability for miners. This is how Bitcoin mining should be done, in a decentralized, non-permissionless type of fashion, non-custodial type of fashion. And they happen to have their own ideological beliefs in terms of what they believe should be the future of Bitcoin with the BIP110 proposal. And as a private company, they have every right to support it. But if you don't fully support the BIP110 proposal, they also give you the option not to support it as well. So I don't see what the controversy is about. Like, as a Bitcoiner, you should be, and I said this, and I'm going to repeat myself, so be it. Guys, the Bitcoin mining centralization problem, as Mark mentioned earlier, just because they're not censoring doesn't mean we can't find ourselves in a situation in the future where they start censoring very quickly because of political pressure, et cetera, et cetera, et cetera. Ocean is actively solving that problem. So even if there is some type of pressure, again, it's non-custodial, it's permissionless, you have the choice as a miner to choose. This is all about sovereignty, right? You guys hear me talk about taking self-custody of your Bitcoin and how important it is. You guys hear me, I'm on a soapbox talking about that all the time. That same type of philosophy should apply to Bitcoin mining. And because it's so capital intensive, because, you know, I know that the bid axes have changed things a little bit, you know, it's people have really, you know, I don't want to say lost the plot, but have not really been paying attention to that as much as they should be. So, you know, I love what Ocean is doing, actually helping decentralize the Bitcoin mining, the Bitcoin protocol in general. If you don't like BIP 110, vote. You have the ability to do so. If you do like BIP 110, vote. You have the ability to do so. If you have a problem with, and I've never made my stance known, but some of our creators have. It's none of your effing business, bro. Do what you want to do. That's the beauty of Bitcoin. Like, do what you want to do with the Bitcoin protocol. Vote with your node. Vote with your miner. And if you have a problem with whatever so-and-so is doing, that's your problem. It's like, it reminds me of the Jeff Booth quote that I say all the time. Like, the thing about Bitcoin is that you're going to have to be okay with even your worst enemy using Bitcoin. That's the beauty of Bitcoin. Like, that's the beauty of it. That's the whole point. So you should be happy with the fact that another individual is running whatever version of the Bitcoin protocol they see fit to themselves. Because if we find ourselves in a world where it's this kind of hive mind, which I've been seeing, because we're getting tremendous amount of pressure at Simply Bitcoin. Hey, Simply Bitcoin, pick a side. Hey, Simply Bitcoin, don't platform this person because they support Bitcoin BIP 110. Hey, Simply Bitcoin, don't support this person because you know they're talking about the core side. Guys, you've lost the effing plot if that's the hive mind type of mentality that you're taking. I support your right to choose. Actually, I don't even support it. You have the right to choose. There's nothing I can do about it. That's the beauty of Bitcoin. That's the beauty of it, man. And we have to remember that. So, Mark, I completely support what you guys are doing at Ocean. It's incredibly important, the mission that you guys have taken on. It's decentralizing the Bitcoin mining pool situation. You guys are doing it right. No one else is figuring out or trying to figure out this problem. And I hope that more and more people continue to point their miners at Ocean, because you guys are actually solving a problem. And to clarify, once again, you have a choice at Ocean. BIP 110 or no BIP 110. That's up to you, the individual. I don't care what you do. That's your choice. So that's my stance on that, Mark. I don't know if you want to add to that. You know?
Ideally, in an ideal world, 100% of our miners would be using Datum, because that just extends the choice even further. Like, being able to voice your opinion on a fork is the thing that the two template solves, but it still doesn't give the miners the ability to brand their blocks or build the block template. So in an ideal world, everybody would be essentially a solo miner, completely sovereign, making their own choices, and we would have a bunch of different blocks solved by different miners, branded with the names of those different miners, and the pool is really just this. Again, there's no middleman, there's no gatekeeping. It's just a payment split coordinator. So that's the future we're hoping to build. And again, I really appreciate all the folks that have jumped on with us and helped us in this mission.
Absolutely, man. I love the Ocean guys from the Ocean. If you know, you know. If you understand that inside joke, you understand it. But you had to be there. Anyways, before we wrap up, I do want to give a shout out to our conference sponsor, Mining Disruption. Be there. You guys don't want to miss it. It is the largest Bitcoin mining conference in the world, July 21st through the 23rd. If you want to meet the Ocean team, if you want to get a job in the Bitcoin mining industry, if you want to know anything about Bitcoin mining, you don't want to miss Mining Disrupt, and you can use promo code SimplyBitcoin. Again, promo code SimplyBitcoin to get 20% off your tickets. It's July 21st to the 23rd. It's coming up. Get your tickets now. You're not going to want to miss the biggest Bitcoin mining conference on planet Earth. Mining Disrupt 2026 in Miami, Florida, July 21st through the 23rd. Again, use promo code simplybitcoin to get 20% off your tickets. Mark, hold on for a sec. We're going to wrap up the show. Guys, thank you so much for tuning in. Have an amazing weekend. Go outside, go touch some grass, get some sun, eat some good food, enjoy time with the family, and we'll see you on Monday for a brand new episode of Simply Bitcoin Live.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.